Done. We'll start off with a few of my favourites that I generally follow. I think the euro is usually one that I tend to start with. Let me just find it. Okay, so we'll start with the weekly chart of the euro just to get the bigger picture. That's going back most of this year. So in general, really the weekly trend has been sideways if you go back for most of this year, the last 8 months or so. But more recently, of course, we've had a decent rally up from around the middle of July. So we've been in a nice uptrend, which got a little bit overcooked recently in the last week or so. Hang on a sec. That wasn't the weekly chart at all, was it? That was a daily chart. Just let me change that. That's better. Okay, anyway, weekly chart's a bit more compact, but you can see that over the past year we had a rally up into the beginning of this year and then basically just gone sideways. But as I said, recently we tried to push high. Just note that 200-week moving average there at 133.83, which we tried to get through this week, but we haven't managed to hold a break above there. So that's just worth noting. And weekly stochastics getting a bit overbought, so probably a bit overcooked after such a good run. I didn't see any particular reason for it to run out of steam, to be fair, other than an overbought stochastic, which isn't always the best reason to pick a top in this market. But having said that, we have eased back, so I wouldn't start getting too negative about it. I mean, we are near the upper end of the range, but wouldn't go against the recent uptrend. You know, we've got a good 5-6 week uptrend in there. I can't see any major reason to start selling it yet, other than we're up near the upper end of the range. So what can we say about that? At this stage, we're just seeing a little correction in a fairly decent uptrend. I've got some bid levels on here, probably a bit too many, so I'm just going to take some away there. You can see we're just approaching the 23.6% Fibonacci support, which is at 132.87, 88, 87 area. We've bounced from just above there today. I think below, what have I got? 132.98. So we got to within 10 pips of that. Saw a nice bounce. I'm guessing short term is starting to look a bit oversold. Yeah, we are. 4-hour chart is one that I like to keep an eye on, just shorter term. And so we've got a little bit oversold there, just as we were approaching that 132.88 support level. The first Fibonacci support level, which often holds on the first attempt, especially in a nice uptrend like that. So 4-hour chart, you can see that shorter term fibs, I've just taken it from the low at 132.04, which was middle of last week, I think it was 15th, yeah. So somewhere around the middle of last week. That last little leg up, I've put a Fibonacci retracement on there, and you can see that really coincided quite well. 132.98 on there, so it's 10 pips above the 132.88 on the slightly longer term picture. So within that 10 pip band, we were looking for some sort of bounce, bearing in mind we were getting oversold. And as I say, the low today was 132.95, so that's actually worked quite well. So short term, maybe we can now see a little push higher again off that support. We've already managed to bounce as far as 133.46 is the high of that 4-hour bar. But I would guess that 132.98.88 could be the low for today at least. Even if we retest it, we could probably see a bounce off there and then start to push higher. You can see some 133.60 area. What's the high today? 133.64. So yeah, that sort of fib area is holding. If we start to push above today's high, 133.64, it is. Then we can maybe get back up into 133.90, 134 area, and just see what happens there. I'm just looking very, very short term before the weekend now. That's really as far as I'm looking at the moment. So yeah, let's see if we can get back up to there. I think we probably can. 133.90, 134.00. We'll probably struggle there though, because the bigger picture is starting to look slightly more negative, and we are looking for a little bit of profit taking. But if we do get as high as 134.5, which I do think is unlikely, but can't rule it out, then maybe we could start looking for a double top pattern, and then we could start feeling a little bit more negative as we go into next week. That would be some sort of confirmation that we have seen short-term top. If we backed away from 134.50 on a second attempt, you'd sort of be saying, right, double top, overbought. We're near the upper end of the range. Risk reward wise, you probably want to be thinking about a short there, because failure to sustain above the 200-week moving average, it's all sort of painting a more negative picture as we start next week, I would suggest. Obviously, if we start breaking down below the 132.80 area, well, that's also going to be a bit more negative probably trigger some profit taking on any longs that have been held from lower levels. And then we're looking at this little trend line here, which on the daily chart comes in around 132.20 area for next week. So just watch that 132.20 if we lead back. And then we've got this low here at 132.05, so 132.20.05. And then if any longs there need to be stopped out below 131.85, that's the next big good support level. Having said that, I would guess that 131.85 will hold at least on the first attempt. So those are the levels to watch. I think if we break higher, which I don't really think we will, but if we do, well, we've got to get through 132.50. And then we're looking up at the 134.50 is where we've got to be closing above really, and then we can start looking at 135.20, which is a good sort of 60-70 pips high if we break high, but that isn't where I favour it. I favour it lower. Okay, so that's a euro. Let's have a look at some more currencies. Let's try KB. Any requests, just send me a message and I'll try and analyse that market for you. Okay, weekly chart of cable, pound versus the dollar. Okay, so we've recovered quite nicely off what was sort of a double bottom down here at 148.32 and 148.14. So that was a nice little double bottom. I think we talked about that last time earlier in the month on the last webinar that I did. Seems to ring a bell. I don't follow this one very closely, to be fair, so I'm just going to try and refresh my memory. Okay, so we've got close to the high back in, what month was that? June, 17th of June. Okay, so we got back up to 157.5 was the previous high. We got close to that. You can see if I can just tweak that. There we go. So we've got all sorts of weekly moving averages here. 100-week moving average at 156.86, 200-week moving average at 157.50. I do like to keep my eye on them. The previous high for this last rally was 157.50. So, you know, within that area, there's lots of resistance, and we have managed to fall back from there this week. Note that this is what's that called? Is that a shooting star? In my book, it's a reversal week where you make a new high and then close lower. So if we were to close here, for example, tomorrow night, that would be quite negative to start the week next week. A new high followed by a lower close, not particularly positive, although we're not that overbought in the daily stochastic and the weekly stochastic. So we go to the daily chart. Yesterday was a similar thing. New high, lower close, red candle near the bottom. I think it's called a shooting star. Not very good on the candlestick names, but anyway, that's quite negative. It shows that a bit of exhaustion. Daily chart, stochastic, very, very overbought and starting to turn negative. So bearing in mind all of that, near the top of the recent range, and is there any Fibonacci resistance there? No, not really. 157.83, we didn't really get very close to that. So yeah, we're going to at least see some profit taking. You can see, well, that's already started. Let's throw some fibs on there just to get an idea where we might go to. 200-day moving average at 155.17 with first Fibonacci support at 155.04. So that's a nice little tight band, 155.17, 155.04, which is a reasonable target. Certainly looks realistic at this stage. We might see that next week. I'm guessing we're not very oversold on the short-term chart yet. We'll just have a quick look in a minute. But I would imagine by the time we get there, we will start to look oversold on the short-term chart. So shorts probably would be very wise to cover around that low 155 area because there's a good chance of a bounce. Oh, well, we are actually getting quite oversold on the short-term chart already. Back. Let's just have a quick look at this. What level is that? Okay, so short-term fib would be from here. Let's just see if this is saying anything to us. Okay, yeah, so there is a short-term fib support then, 155.70 area. We slipped below there today. We got to 155.60, so only 10 pips below. Now we're making quite a good recovery. So, okay, maybe we'll get a little short-term bounce at least. To where I'm not really sure. We've got some activity around the 156, 50, 60 area. So that looks like a reasonable target. 156, 50, 60. If we get through there, then we're looking at another attempt at 157.00, 157.20, which I would suggest would be a good area to short. A bit like the euro, possible double top there. So I don't know whether we'll get up there. We may not. But definitely watch that 156, 70, 60 area, because we could, if we break that, then I'm pretty certain we'll see 155.20, 155.00 for some profit taking on any shorts, and probably even try some longs down there. We should be pretty drastically oversold short term at that stage. It's not that far away, 90 pips or so, 80 pips or so. So anyway, those are levels to watch in the table, I think. But certainly we see some profit taking in the short term, or more profit taking in the short term. Okay, got a request to look at gold. Okay, weekly chart for gold. Well, as we say every week, in a downtrend. But we have had quite a good bounce recently from the beginning of July. So what does that mean? Okay, well, we got very, very oversold. We bounced off 1180. We've had a really nice rally, actually, for the last 6 weeks or so. Longer than that. Couple of months. Not yet overbought the weekly stochastic, but, don't forget, we are in a pretty strong downtrend, and we're starting to run out of steam already. Daily chart, obviously, getting very overbought now. So I personally just think that this rally's a bounce in a downtrend. Don't really see this being prolonged, not at this stage anyway. I think we need to see some more bullish pattern in order to start getting bullish on gold. So yeah, a bounce in a downtrend, getting overbought on the daily stochastic. We've hit the 100-day moving average. That's the brown line here. It's supposed to be brown anyway. Dark coloured line here. Okay, which I'm pointing at. So this comes in at 1368 today. We've been hovering around it anyway. 2 days ago we tried to get through it. We couldn't close above it. So we haven't actually managed to close above the 100-day moving average yet in the last 4 sessions. We've given it a real good test, a good running over. But the daily stochastics are starting to turn lower. And I think, I would put a bet on that we've run out of steam now, and that's the end of the bounce. The rally in the downtrend is my personal opinion. What are we seeing on the short-term chart? Nothing particular, no particular pattern. You can see this red line here is the uptrend that goes back pretty much from the beginning of the rally, I think, which was somewhere around 7th of August. No, okay, we actually, that's just the last leg higher. We actually started this rally on the 28th of June. So this last little leg that I'm pointing at here started on the 7th of August. That's this trend line here on the short term. I'm now looking at the 4-hour chart. So on the 4-hour chart, you can see that uptrend a bit more clearly. That really intersects very, very nicely with this first Fibonacci support at very short-term Fibonacci support at 1358. We spiked below there recently. We got as far as 1355, but quickly recovered. So we haven't managed to get back to that 1384 area because we really are running out of steam, I feel. So we've gone sideways a little bit as we have a little battle between the bulls and the bears, but I think the bears will win over eventually. But we'll know for sure if we break that 1358 level, where I've got my cursor at the moment. It's a really nice intersection of the short-term uptrend, 2-week uptrend with the Fibonacci support at 1358. So if we break below there and then get through 1355, I'd say that's a pretty nice confirmation that we're going to head lower. 1341 is the obvious next support. We've got a bit of activity around 1346, 1341 area, so that would be the target to maybe cover some shorts in case we start to bounce. Just let me have a look at some fibs on the longer term chart, see what that's going to tell us. Okay, so the first big support is 1336 according to those fib levels. So that's the one to look out for then. If we get through 1341, look for 1336, but short term we should look quite oversold at that stage. So just watch for a bounce there. I think that's about as much as I can say just for the short term over the next few days for gold. But I personally wouldn't be fooled by this rally. I don't think it's the start of a bull run. We shall see. Okay. Eurostock's got a request to look at Eurostock, which is one of my favourites. So here we go. Okay, weekly chart. Stock markets are quite interesting. They have been moving around a little bit. S&P is definitely a market that I want to have a look at this afternoon. Eurostocks. Okay, so, well, weekly chart doesn't say an awful lot. We got near the upper end of the range. The previous high was 28.49. We got as high as 28.60, so only 10 points higher, and then we started to back away. This week's high is 28.59, so small double top there. Nothing to get overexcited about. Just very, very small. Okay, so we're back to weight. First fib support level in the very short term is 27.71. We've tried to break below there. Sorry, 27.72. We tried to break below there. I think 27.76 was yesterday's low. Pretty much is today as well, actually. 27.66. So basically that level's holding, and now we've had a really nice ramp back up. So we bounced off that support quite nicely, you know, within 6 ticks of it. So that's worked quite nicely. And off we go. Short-term chart, 4-hour chart. Yeah, we got very oversold. Not really a massive surprise that we got oversold after that. So anyway, long-term trend is up. This looks like a correction in a bull market or in a bull run, recent bull run. If we can hold above 28.09, which I kind of fancy we will, because I know that the S&P looks quite strong now, then really, I don't really see there's anything to stop us at least testing this trend line, which is just getting very close to this recent high. 28.50, 28.60 really does look like a realistic target for this rally. Stick with the uptrend. Longer term, very much longer term, I'm slightly getting worried about this. And I will have my eyes peeled for any sort of topping patterns. I mean, maybe we can get up to this trend line here, which is around the 28.94 area. I'm talking sort of autumn time, really, not very short term. So anyway, we'll have to see what happens, but at least very short term into the weekend, things look quite positive now. It's just a correction in a bull run. We've held the first support. We could easily get back and retest 28.50, 28.60. What happens there, I don't know. But if we do see a top there, well, that'll be a little double top, and then we could be looking at 27.18 at some stage. But until we know what happens on this retest, you know, we won't know where we're headed next. So keep an eye on that. But I say if we do break 28.60, then it's a fairly short hop to 28.90, 29.00. Wouldn't be surprised to see that. Actually, on that subject, I'm going to just quickly, I've got a request to look at the table, which I will do. I think I looked at it earlier, but I'll look at it again. But on stock markets, I just want to have a quick look at the S&P because it's quite relevant to what we've been doing. So S&P has had a good run all the way back to 2009. I mean, fantastic bull run. But more recently, we had a little top out at 17.05. We pulled back. But I think really that was just because we got very, very overbought. Weekly stochastics got very overbought. There wasn't any other reason to sell it. We were hitting new all-time highs, so there was no pattern to say we were going to have a massive sell-off. Some of the press I've read have started getting all doom and gloom. Well, just because we've had a couple of weeks sell-off in the stock market, so I really don't think it's doom and gloom time. I think that's just a correction in the bull run. I just want to show you this little pattern here, actually, which we spotted and wrote into our reports. This was one reason to get short. You see this little, I'm going to draw the neckline here. There's a head and shoulders pattern which really worked quite well. And anyone following us would have been alerted to this. In fact, if you go to our website, you'll see this report. I think it was the 15th of September. If you go and have a look, I think that report's still on our website. Anyway, we had a left shoulder here, head, and then the right shoulder here. So nice, clear head and shoulder pattern. And once we broke this neckline at 16.75, it was just textbook stuff. Broke the neckline and puked. The target was 16.47, 16.45. We hit that very quickly. I was forecasting we'd hit that before the end of the month. We hit it within 2 days. So a really sharp move. You know, that's the sort of setup that you really, really like to see. That just worked perfectly. We overran a little bit. I thought 1645 may actually hold the downside. Well, yesterday with the FOMC minutes, we broke lower again. Why did we hold 1630? I'll show you why. Well, firstly, we're getting oversold, but 1629, 1630, 1629 was a really nice, good support level and 100-day moving average. So there was very, very little chance of us breaking below there. That was a big level. We didn't actually quite reach 1630, and that move did come overnight. So I certainly missed buying it, unfortunately. But no surprise that we bounced off there, and I think that now means correction over, return to the bull run, off we go. 1647 is an obvious resistance. We've not managed to get through there today. We've got 1646. So that's, I mean, S&P, I really like it. It does chart really, really nicely. The levels really work. They really hold. And, you know, today's a typical example of that. So, so watch 1646, 1648. Probably won't get through there today, but I would suggest we may get through there tomorrow, and we'll just continue higher. I think 1659 is the obvious next target if we get through there. 1668 after that, so sort of every 10 points we've got a target. Do I look at momentum? I do not look at momentum too much. No, I've got to be honest. I've looked at all sorts of different indicators, and sometimes they work for me, sometimes they don't. If they work for you, that's great. But I just try to keep things simple. So as you can see, I look at moving averages, stochastics, chart patterns, trend lines, and I use Fibonacci a lot. But I do look for divergence on the stochastics, definitely, and we certainly, it's a good point you brought that up there, Richard, because we've got quite good divergence here, in fact, in the S&P. On the 4-hour chart, you can see this is starting to trend higher, even though we were continuing lower. So that was a little early warning. And even yesterday when we dumped, made a new low, this stochastic was still diverging higher. So I personally didn't believe that sell-off, and I was interviewed on Financial Juice last night and sort of said 1630 was about as low as I thought we'd go. Well, so far that seems to have worked anyway. As I say, I think we just continue higher now. I think that's the end of the correction. We could get back up to 1705, and then, as usual, we've got to see what happens there. That's the all-time high. If we break it, then we continue to rally, and if we don't, we've got a small double top. Nothing too serious, but it could certainly bring us down to the mid 1500s, sort of 1565, 1555 around autumn. But it's too early to say at this stage. We'll just stick with the bull run as far as I'm concerned over the next few days, and look for a recovery until at least we get overbought in the daily chart. Yeah, thanks. I just wanted to mention that S&P, so I'm finding it quite interesting at the moment, and I think that's going to lead stock markets in general. Okay, yeah, cable. Here we go. We can have a quick look at this, but let me just recap. Okay, so as we said, cable had a good run. Weekly chart, you can see the 100-week and 200-week moving average resistance here at 156.86, 157.50. We failed here. This is quite a negative candle forming on the weekly chart now, showing exhaustion really, spiking higher, unable to hold on to those gains, potentially closing below last week's close, and definitely below last week's high. So if we were to close here, for example, tomorrow night, that would be negative and certainly indicate that we've got some profit taken on the way. Daily stochastics back that up, overbought, turning lower. Yesterday's daily candle backs it up with a shooting star or a reversal day, new high, lower close towards the lower end of the candle. Today that's been confirmed with a move lower. So I'm thinking we've got some profit taking at least coming here. And my first real support level would be the low 155. So 155, 1505 would be the target for this little sell-off. It's 200-day moving average support. It's Fibonacci support. I do think we'll hold here, and I do think we'll bounce off there. Maybe we'll see that before the weekend. I have no idea of timing, but if we do, I would suggest that probably will be the low for this at this stage. What happens next week, I don't know. If we break, then we've really got 153.72, which is a 55-day moving average. We're just below here, the 100-day moving average at 153.47. So sort of 153.75, 50. I would suggest that would be the next support level, and I wouldn't be surprised if we then hold that and have a really good rally off it. But short term very, very short term, we've found some good support today, so maybe that might be it. But tomorrow wouldn't be surprised to see it break lower and potentially hit that on low 155 area. That's just a recap because we did go through that earlier. Someone's asking me to go over gold again, which I will because we've already done it once. But what I said earlier was that the bigger picture for gold was is a downtrend. We got very oversold. We've seen a really nice bounce. I don't think it's the start of a bull run. I do think that's a bounce in a bear move, just a correction, which was needed because we got so drastically oversold on the weekly and the daily charts. Daily charts now overbought, starting to look negative. We hit the 100-day moving average. We haven't been able to close above it. We've been hovering around it while the bulls and the bears battle it out. Some people are starting to get bullish in the press about gold all of a sudden. I don't agree with it personally. I mean, if we start to close above the 100-day moving average, maybe if we get through the previous high of 1384, I think we can, certainly get to 1414. But I don't see it at this stage. I might be proved wrong, and we might get to 1414. Can't rule it out. But if I had to put a bet, I would be betting that we head lower now. We've had a nice little bounce today, but we haven't got anywhere near 1384. Anyway, that's my view. I think it's a bounce in a bear trend, not the start of a longer-term bull run. Okay, let's go to another new crude oil I've been asked for, which is something I do follow quite closely. WTI. Okay. Weekly chart for WTI, we've been having a really good run lately, all the way from the beginning of July or even the end of May. End of June, beg your pardon, end of June. Okay, so we've had a good run up since the end of June, all the way from below $78 up to 109. Obviously, we're overbought now on the weekly chart. We have got near the upper end of the recent range. Sorry, let me squeeze it up a little bit. Okay, so we saw a high end of February, which was up at 108.19. Oh no, it wasn't. It was 109.67. So we've got pretty close to there, within sort of 35 ticks of it. So the upper end of the recent range, and in effect, we are in the range. If you go back a year or so, we haven't actually moved out of this what's that low? $75 up to 109.5. That's been the range. We stayed within that range. That was set sort of end of last year, beginning of this year. We stayed within that range. We've managed to get up near the higher end of that range, and we've basically hovered on a weekly basis at least. It doesn't probably feel like that. I've been trading it. There's the daily chart. So I've just taken that recent run up and put some fibs on there, and they seem to be working quite well. We've got a bit of a double top as we here, and we did sell off. Okay, so what's happening now? We've had a little bounce. We sold off to good fib support at 103.64. That's held over the last couple of days with a low at 103.50 actually. So yeah, that's held really well. 103.64 was our support. We held it. We bounced off 103.50. So that's working quite well. In the very short term now, we've got very oversold. So we are looking for a recovery. Actually, we scheduled a bit update. Let me just take that off. So get an idea of where we can bounce to in the short term, at least before the weekend. Okay, 104.60 was one of our targets for the day, and we've certainly got there. What's the high for the day? 104.57. Okay, so we pretty much tested that first Fibonacci resistance level and held it. We backed away, but it looks like we can break higher and probably get to 105.28. We've got some upward momentum. We've got some room on the upside, but it's difficult. There isn't really anything pattern-wise. We've just ranged for the last week, or well, actually the last 4 weeks. Really, look, that's just a range. So I guess you trade the range until we break it, and the range is sort of 103.5 up to 109.00. If we break above 109.23, well, we've got a very short hop to that 109.67, was it? No, sorry, that's actually 110.55, that previous high. So maybe we've got another point on the upside if we break the 109.30 area. If we don't, the lower end of the range is sort of 103.5. We did have is it last week? I think that one we're looking at there, 102.20. So if we start breaking down there, we're going to be heading for 118. Sorry, it's a bit of a wishy-washy comment, that one, in oil, but that's just because it isn't really doing anything, so I can't really elaborate anymore. Trade the range until it breaks, basically, and it's held decent support today. Daily chart suggests in the very, very short, the 4-hour chart suggests in the very short term we can stage a recovery after a really decent sell-off over the last few days, 3 days. What can I add to that? Not really. There's a trend line here, which we need to watch. 105.37. So actually, I think that ties in with one of our bid levels, isn't it? Yeah, 105.28. So 105.30.40 is our target on the upside if we break 104.60 in the very short term. Sorry, can't really say an awful lot more about that. It's not really doing an awful lot. It's volatile intraday, but on the grand scale of things, it's not really going anywhere, as you can see from this very chart. Maybe head up towards the higher end of the range. I'm being asked what my values on the stochastics are. I use 1033. That seems to work best for me. Tried various different ones, but 1033 seems to work quite well. Okay, we're on the subject of energy. Nat gas is one that I follow, and I'm just going to show it to you quickly because it was charting quite well. I doubt many of you trade nat gas, but it's worth watching because we sold off recently to good support of 31.73. We've just tested that 100-week moving average, and you can see there we blipped below it on the week, but we didn't close below it, net below it, and now we're starting to stage a recovery. Actually looks quite positive in that gas after that correction, and we're starting to head higher, getting a little bit overbought on the daily chart, but there might just be a little bit more room. Just watch this trend line here. You can see this trend line going back to 28th of May. We're holding it today almost perfectly, in fact, as you can see. So that might be it for the short term. We might head lower again. We're getting a bit overbought on the daily chart, but it's charting quite well. That's just why I wanted to point it out. Just take that through off because that's not relevant. Getting a bit overdone on the 4-hour chart as well. So yeah, maybe that trend line we're holding back. We'll start to sell off a little bit in the short term. Maybe that's it for that gas for this week. On the upside, we'll sell off into the end of the week. Yeah, that looks quite likely actually. Okay, I won't dwell on that too long because that many of you trading that gas. If there's anything else you want me to look at, please let me know. In the meantime, I'll go back to the currencies and look at, we've done Canadian, we've done the Euro. Canadian's one that I usually get asked on these webinars, so let's look at Canadian, not one I do every day, so just let me remind myself of what's going on in this one. Not a great deal on the grand scale of things, but anyway, we've corrected. This week we've had a good run. Okay, so oh yes, I do remember this. We were talking about this one recently. Okay, so we saw a sell-off and we broke the first fib. 102.36 was the next target. We bounced off 102.46, so we got to within 10 pips of that good support level. Guessing we were probably oversold on the daily chart when I click on it. Anyway, we bounced nicely off there. So the uptrend's still nicely intact on the weekly chart. We throw some trend lines on there. We will be able to see what's going on. Okay, so nothing much to report there. Okay, so daily chart, we've recovered nicely. I mean, we just oh yeah, okay. You can see the 100-day moving average. I do like the 100-day moving average. It's always worth keeping an eye on. Last year, where are we now? What was this day? The 9th of August. Okay, so earlier in the month, we tried the 100-day moving average all the way through the end of July. We tried it on so many different occasions. We really didn't manage to close it below it. We did just on one occasion, but barely. So that 100-day moving average worked really, really well. We bounced off it. We came back to retest it, and boom, that was the trigger for a nice rally off it, which we've seen in the last 2 days. So that's all looking pretty positive. It's all looking like we're probably going to retest previous highs at around the 106.00 level. Good momentum in this one. Short-term chart, well, It's positive, getting overbought, but no sign yet of a top. So just because we're overbought short term, probably not the biggest reason to get overbought short term. Yeah, I wouldn't start getting short this one yet. Let's just see if we can get back and retest that previous high. 105.30 is a good target. And if we start breaking above 105.20, hang on, 105.40, we may well be on a run up to that 106.00 level. Yeah, so looking quite positive, Canadian. Don't fight the uptrend, I would say. That was a really good opportunity to get long down there. Obviously. Bunds, yeah, I do look at bunds. It's one of my favourites. I will look at 10 years as well. I haven't had a look for quite a while. See if I can remember the code. Okay, so bunds. Bund weekly chart. Not looking too positive. There isn't any real pattern here, but we've certainly. I'm trying to look for some sort of head and shoulders or something negative. I mean, there isn't really. For some reason, I just don't feel very confident about this. Well, one reason I suppose is we've broken 140.75, which is a longer term bit of support. You can see I'm squidging the chart right up there now. We had a really good rally from what's this? From April 2011. We had a really nice run up, and then we started heading sideways. This is the weekly chart, so really looking at a longer term picture. Anyway, we started to correct. There's all sorts of talk about less QE and tapering and all this kind of stuff. But from a chart perspective, below 140.75, we closed last week, and that is a negative. This week, the high is 140.71, so that's really held quite nicely. Just doesn't look too positive. We're oversold in the daily chart, but that in itself isn't enough reason to start buying into this. I can't really see anything telling me to get long. We've got some trend line support down here around the 139.30 area. I think that's the area to look at the moment. What can I say? Not too positive. If we hold 139, the 40 area, then or 30 area, 139.30, then I could start getting a bit more positive. But we have to see if we get any sort of candle formation that tells us we're going to get a bounce. Just because we're oversold, I don't trust that, and I certainly wouldn't be trying to put bosses in the bund at the moment. What does the short-term chart tell us? Nothing, other than we've been going down. Don't fight it. Yeah, that's it really. What can I tell you? Don't fight the downtrend. Just despite being oversold, just watch 139.30 and see what happens there. If we get some sort of, sharp bounce off there on the day and a close higher, then you might be able to start talking about buying into a long and looking for a short-term bounce. But unless we really start to get through 140.75, I wouldn't feel confident either. Moving average-wise, 141.44 is a 100-week moving average, so again, that would be another thing we have to look at. Being asked what chart platform. This is actually eSignal. I used to use Bloomberg, but I stopped using it. eSignal's good enough, I think, and a lot cheaper, which is the reason I swapped. Aussie dollar. Being asked to look at the Aussie dollar. Yeah, let's have a look at that one. We're going to time a little bit longer. Okay, Aussie dollar. Weekly chart. Okay, well, we all know we've had a really serious down moving all over the press, so sure lots of you trade this one. What can we say? Not quite sure why we bottomed out there, actually. I don't think there's any there wasn't any support that I could find, if I remember correctly. Just let me try and remind myself. No, I couldn't see any particular reason. But anyway, we did get very, very oversold, so sometimes that can be enough. Right, interestingly, 2-3 weeks ago, look at this candle here. That was quite bullish. Well, it certainly signaled the end of the sell-off for a short while, this candle here. You can see that we made a new low and then had an enormous bounce right through the halfway line of that red candle. And that looked quite positive. I thought that might signal that we were about to have a huge rally. It wasn't to be the case in the end. So, daily chart, what's that telling us? That was a little bullish candle there. You see that spike lower, close higher, opposite of a shooting star, whatever it's called. Is that a hammer? Yeah, I think it's a hammer. So that also signalled on that weekly. That was getting very oversold. That was a potential signal that getting very oversold, we were going to have a little rally. And anyway, we did have a little rally. So what happens now? Okay, so we got a bit overbought in the daily chart. We're coming back down. Doesn't look too positive, does it really? It's starting to look like we're going to retest that previous low, 88.48. Hard to fight the downtrend. I mean, we did pretty well. We managed to get very close to the first bid target of 92.57. What was the high? 92, I can read it. 92.33. So fairly close, within, sort of 25 pips of that first retracement target. And actually, coincidentally, the 55-day moving average. 55-day moving average. So we hit that 55-day moving average. Sold off. We got slightly overcooked on the daily chart, and we are in a downtrend. So, you do often fail at the first 23.6% fib resistance, and we did in a classic way there. Short term, okay, hang on. Short term, we got quite oversold. And look at this candle here. Big spike lower, close above the previous close candle on this 4-hour chart. That actually looked quite positive. So short term is looking all right. Short term we could recover. We've actually got through 90.00, which is good. 90.44 the next target. We've got to then get through 90.57. 91.16 is going to be a struggle. We're going to start looking overboard there. Does it coincide with anything else? Not really. Okay, short term it looks all right, but longer term, I just don't think you can fight this downtrend. There's just nothing really telling me that. It's quite positive, that candle, but anyway, it's tricky, isn't it? I'm not really sure. We're in a downtrend. We failed at the first resistance. We're coming back down. You can't rule out a test of 88.48. And that would be useful if we saw what happened there. We could see if there's some sort of double bottom. I'm getting a bit stumped here, as you can probably tell. It's all a mixed bag. All right, short term, I think that candle's quite positive. We are oversold and we are above 90.00. So it's a short term. I think we've got to look for this to continue higher. I wouldn't say this is the start of a bull run necessarily, would I? You know what? There's almost a head and shoulder. There's almost an inverse head and shoulders here. This is really confusing me. Look at this. This could be forming. It's a bit early, but there is a potential inverse head and shoulders here. You've got left shoulder, head. Is this a right shoulder? Could be. It's a little bit too early to say, but oops, didn't mean to do that. Just keep an eye on that and see if we do start to round here and head higher. That would be an inverse head and shoulders. And then you've got this neckline here, which is roughly around the 92.00 area. We start to close above that. That is going to start looking quite positive. This is quite interesting, actually. I'm a bit confused because there's no definite signal, but let's just see how it forms. We could be getting a right shoulder here. We could maybe even see a double bottom. Good angle for the neckline. Yeah, I mean that's fine for a neckline. This is a case of sit and wait. This isn't a case of trade it now. There's some interesting stuff going on. I just can't put my finger on it. Mainly because we bounced off a level that I didn't see. That I can't see why we bounced. We've got this really bullish candle on the weekly chart. We're very oversold on the weekly chart. The weekly chart looks like we could recover. Daily chart's a bit of a mixed bag, but I'm thinking we could get an inverse head and shoulders here. And then the short term, we've got this bullish candle, and it looks like we're going to recover. So just watch it. Let's see if that head and shoulders, inverse head and shoulders does happen, and if we do break this neckline. It's quite interesting. Anyway, I've tried to make the best of that as I can. And I hope it makes some sense and it gives you something to look at. If you need me to go over that again, I will. I'm not really sure what to say, but hopefully you can see what's going through my head. Slightly confused, and I just need to see how it develops over the next few days. I guess that's all I can say. We've still got a little bit more time, and I'm being asked for the dollar versus the yen. That's the euro versus the yen, so hang on. Okay, euro versus the yen, yeah. Big rally beginning of this year, and since then we've got this sort of triangle type thing going on, as you can see, which is often a continuation pattern. So yeah, very clear. Triangle, where do we break? Usually the break to the upside would be expected to be a continuation pattern rather than a reversal pattern. We'll have to wait and see what happens. That's it. Trade that parameter really. Let's have a look at the daily chart. See if there's anything more short term. Not really. We're struggling with 100-day moving average 98, 98. I mean, you can see the triangle here quite nicely. If you've got that, I'd draw those lines on your chart really and just trade within that and wait for the breakout. Be ready to go with the breakout. I mean, the moving average is getting close to the uptrend line. 98, 98 is the 100-day moving average, and we've got the trend line at today at least at 99.40. So, 99.40. Yeah, okay. So there's a bit of a distance between that. Looks quite positive short term. I mean, weekly chart isn't really saying anything other than we're in an uptrend. It's consolidating, so it's a pretty big triangle. But we look all right. Watch 98, 98. See what happens on the 100-day moving average. We tried that a few days ago or last week or something. Yeah, we couldn't get through it. We backed off pretty sharply actually on the 15th of August. We might back away sharply again. We'll have to see. What can I say? We're stuck in a triangle, and until we break out, we don't know where we're going. Short term, getting a little bit overcooked, so maybe that 100-day moving average will hold again this week as it did last week. If we've already backed, if that's it, it's very, very short term. Now these fibs seem to be working quite well. Okay, so we've got to 98.80. If that's it, and this 4-hour candle is sort of indicating that it is new high, lower close. This is the candle at 12 o'clock, so this candle is about to close. So therefore, this is a little bit more negative now. Okay, if we do back off, and it looks like we will, I'd suggest we're going to see that 98.10 area. That's held quite nicely before 98.10, 98.00. Watch for a move back to there, possibly a little bounce from there, but these fib levels are what you want to watch in the short term. 98.10, 97.65, 98 sort of 70.65, and then below there 97.30. I wouldn't be surprised if we bounce off 97.65. I don't think. It's very rangy, so these levels will probably hold on the first attempts at least. Okay. Yeah, that's it. What can I say? Not much really. It's not really got any direction, so it's a tricky one. I'll trade the range, trade the fib levels until we see some sort of break and be ready to go with that break. Okay. What else have we got? New Zealand dollar. I'll do that one because I'm usually asked. Okay, weekly chart. Getting very volatile. Very volatile. So we've been bouncing around pretty much between 200 and 100 week moving average. This week, the 100 week moving average is at 77.97. We bounced almost exactly off there. We've tried the 100 week moving average and got as far as a 55 week moving average. Okay, so we're just going sideways. No trend, no pattern. Throw some fibs on there just to try and some idea. No, that doesn't help a great deal, to be honest. It's a little better. Okay, that picture seems to be working quite well. It's holding these good support levels. There you go. Direction is it's just choppy, isn't it, on a weekly basis? What can you say? Daily chart. Blimey, don't know what to make of that. Trend line. Okay, so we've got a bit of a trend line going on here. We bounced just above it in recent times, holding there. So looks like we're going to head towards there now. We are heading there towards there already. It's fairly obvious that what 76.84, 76.88, 76.95. Okay, so 76 sort of 90.80 area has acted quite well as support, and just below there we've got a trend line at around 76.55. So I guess those sort of low, sort of high 76s, high to mid 76s might be where we're headed. Difficult one, this one. We should never bother to look at it now. It's not really telling me anything. If you can make sense of that, then you're a better man than me, or lady. Someone asking me, candles look different on short-term 240-minute chart on my platform. What kind do you use? I don't know why my candles look different than your 240-minute. Sorry, I don't know how to answer that question. Okay. We've not got a huge amount of time left, so if there's anything that you can look at, please let me know. Otherwise, hopefully I won't try and find them. Hopefully I won't find anything like the New Zealand dollar again, which is completely confusing. But what can we have a look at? Silver. All right, silver, like gold, has been heading lower. We've had a little bounce. Again, I just think it is a bounce. It's similar ideas of gold, of course. Bounce in a bear trend, I think. We got very, very oversold on the weekly chart, and we bounced from 1823. Had a good run up. Last week was a real nice spike higher, actually. Must have squeezed a few weeks short out there, actually. Daily chart, we've got overdone now. So really this bounce in the bull market, as I said in gold earlier, bounce in the bear market might well be finished. We didn't really get as far as we could have done. 24.80 would have been a really nice selling opportunity. We didn't get that far. We got to 23.60. But I think perhaps we're about to resume the downtrend in silver, a bit like I think we are in gold. 22.34 is the level to watch. We bounced off there last week quite nicely, or this week in fact, 20th. Okay, so a couple of days ago. So watch that, 22.34. I think eventually we will break that and test the 100-day moving average at 21.90, and then the next support 21.55. So yeah, I mean, not really much more to say in silver. Similar to gold, we've probably had enough of a run up. No short-term bounce to speak of, really. Just going sideways. So just watch that break of 22.34. That would probably trigger more selling and see us down at 21.90 as I say. Probably 21.60.55 as well. 5.2. I'm guessing we're running out of time, are we? Or we'll have time for another market. If I do, run through Euro versus yen. See if that's doing anything. You can't see what's doing anything particularly exciting. Again, this one in the last few months has really just been chopping about. Some obvious trend lines we can put on here. Okay, so again, a bit of a triangle. quite positive. You know, it's quite positive. It's not telling us that this market's about to dump necessarily, even though we've got a little bit overbought. But maybe this can continue higher. Look at short-term daily chart. Yeah, we're sitting nicely above that 100-day moving average. We tested it on several occasions. Well, just this little cluster here. We did manage to close below it, but we captured it pretty quickly. It's acted as a bit of a springboard in the last few days, so we're pushing off the 100-day moving average, and let's just see what we've got trend line wise. Whoops. Yeah, we should wrap up. Okay. I'm just going to draw this trend line, give you an idea of. Okay, so we've got 132.23. If we break above there, it looks like we could start rallying again. So just watch that level. A break above that, and I think we continue the bull run. It looks quite positive to me. Anyway, thanks very much indeed for joining me today. I'm going to give you my website in case you want to contact me. I didn't manage to look at your Eurostoxx divergence chart. I'm really sorry, but if you do want to contact me through my website, then I'll be happy to go through it with you. Thanks very much indeed. Look forward to next time.